Thank you for joining Jennifer Schaus and Associates in our 2019 Webinar Wednesday series. We're coming to you live from downtown Washington, D.C. Our webinars are every Wednesday, and you can find the upcoming schedule on our website. Past webinars and all recordings are also on our website and on our YouTube channel, along with over 160 other recordings on federal contracting topics. All are complimentary. If you have questions for our speaker today, you can email her directly at the contact information you'll see on the last slide. All right, it's just a little bit about us. We are a Washington, D.C.-based firm and provide services for federal contractors. This ranges from market analysis reports to proposal writing and also post-award compliance. More information is on our website, so please visit us there. We do offer advertising in our newsletter, so feel free to reach out to this email if you'd like more information on that. All right, our speaker today is Marcia Lundquist, and she's going to be covering understanding cost pools. Thank you for joining us today, Marcia. I'm going to go ahead and hand it over to you.
Thank you so much, Mallory. I want to wish everybody a happy holidays. And I think it's happy when we want to understand cost pools. I love cost pools. People often say to me, talk to me about indirect rates, and I could go on forever. So today we're going to talk about one of my favorite topics, and we're going to try and put a little understanding here behind this. So I'm going to talk to you about what the various different types of cost pools there are and why we do what we do. So in the next slide, let me just clarify some terminology for everybody as we begin this discussion today. Let's talk about various terminology that's bantered about. What's direct costs? Direct costs are those things that are directly attributable to a project, a task, a contract. Usually they are things like material costs. If you're in a manufacturing environment, they're labor costs. If you're in a services environment, also in a manufacturing environment, you might have some labor costs as well to assemble things or to install the material that you're buying. Often you have subcontractor costs or consulting costs, material costs, as I mentioned, travel costs, and they are directly attributable to one project, one task, known as a final cost objective. So that's terminology that you'll hear very, very often, final cost objective. And I want you to know that it means the same thing as direct cost. And so, all right, conversely, let me go on the other side of the ledger, so to speak. Nope, stay there, stay on that slide. Sorry, Mallory, I used that word, I'm sorry. I didn't mean to do that, my bad. So what are indirect costs? Those things that you can't specifically assign to any one project. They're going to be things that really benefit more than one cost objective, to use that word that we just talked about, more than one reason for using something. And I'll talk about some of the examples in just a minute. But I want to give you a concept that indirect costs, and that's largely what we're talking about today. Those are the kinds of costs that are used to support your organization, and we'll talk about the various kinds in a second. So what's a cost pool? Cost pools are those, if you will, groupings, if you will, that are homogeneous type of accounts, expenses. They have a similar relationship to one another, and they have a similar relationship to the base being the denominator for calculating that indirect cost rate. Now, on the other side of it, what is a cost allocation base? That again it can be very, very subjective. It can be something that you as a contractor would decide is the base, the denominator for that particular rate. It is the as I call it, the basis for the cost pool's existence. It has a very, very concrete relationship to the cost pool incurred, the cost pool expenses that we just talked about. And we're going to, again, talk to more details in just a minute. Often there are words bantered around about RAP rates, RAPs, burdens, indirect rates. They all mean the same kind of thing. There are different kinds of indirect pools, as we'll see in a minute. But when people say, well, you've got to get your RAP down, or your burden is too high, or those kinds of phrases, they are meaning the same thing. They're talking about indirect cost pools. So on to the next slide, Mallory. Thank you very, very much. Let's discover what is a cost pool after all, and why do you need them? Sometimes I get that question from people pretty often. So a cost pool is a logical grouping of expenses into similar types of expenses. Just like on your balance sheet as a corporation, you group assets together, you group liabilities together. You're going to be thinking of it the same way when you think of expenses. If you definitely want to follow some prescribed way, there is no prescribed way. There is nothing in the regulations that says you must have this particular indirect pool or that particular indirect pool. There is nothing in the regulations that states that. So it has always been left up to contractors to run their business as they see fit, meaning you set up your indirect pools, your cost pools, the way you see it best for your business, and really no one can tell you how to do that. Now, there are right ways and wrong ways to calculate it. We're going to talk about that as we get into the slides a little bit further, but the guidance, let's put it that way, does give you an approach for accumulating costs of an indirect nature, but it doesn't prescribe it in any one way. I think what's most important about cost pools is that they have to be applicable to all contracts. In other words, if you have one federal contract and you've got the rest of your work as commercial work, you do need to apply those indirect rates that you come up with from those indirect pools to all of your contracts. Likewise, if you had one federal contract and then you got another one, let's say you got a fixed price contract as an example, and the first as your first contract, technically you wouldn't have to accumulate your indirect costs into cost pools. It would be wise to do so, very, very wise to do so that you know what that project is costing you. But let's say you got a second contract, and maybe it was or wasn't a fixed price contract. You would still need to apply the costs of those indirect pools to all of your contracts. So then we turn to the why. Why do you need them? It's really, let me start out by saying, frankly, it's good business to separate out your direct from your indirect costs. If you had a federal contract, then you are really required to separate out your direct costs from your indirect costs. You don't have to do it in the indirect cost pools in any one prescribed way, and I'm going to show you some suggested ways, let me put it that way. But you do need to separate your direct costs from your indirect costs. And you have to do that because the contract that you are working on doesn't want to pay for everything. They want to pay for what's on that contract. But you also need to give it a shot of that indirect cost because it's a cost of doing business. I had one person come up to me and say, well, Marcia, I bid it with all those direct costs, but I didn't apply indirect costs, and I lost money. And that's because you didn't apply indirect costs. Hang on, water break. Sorry, I get to talking and get to coughing. So let's just talk about the other reason why I think you need to do this. It gives you a great way to measure your profitability by project if you apply those indirect rates consistently. What do I mean by that? Well, if you assemble your direct costs and you apply your indirect costs from those cost pools to each project, then you would know what it really costs to do business on that particular contract. So let's take a deeper dive into the next slide. Here are some examples of cost pools. A very simple structure on the left-hand side tells you could have a fringe pool, you could have an overhead pool, and you could have a G&A pool. Some companies, when they first start out, don't even have an overhead pool because they're, and we'll talk about a little bit more why, but because there are no costs related specifically to that particular contract that are not directly attributable to the contract. Complex structure on the right-hand side could potentially have these many elements, or maybe even more. I'm not suggesting that you go one way or the other. There are a lot of companies that say you have to have an overhead customer site and a contractor site and material handling and all these other pools that I'm showing you on the right-hand side, when in fact that's not true. Simple, if you're starting out, simple is better, always better. So Mallory, on the next slide, let's talk about what's in each of these cost pools. So in the fringe pool, what do we have? You have employer taxes. You don't have employee taxes, you have employer taxes because after all, the cost pools are your cost of doing business, not your employees. It's not about payroll. It's totally about what it costs you as an employer to do business. You might have the health insurances. Paid leave is certainly in there, although I have one client where paid leave is not in there because they've got one contract. That's it. So they charge their paid leave time directly to the contract. In an educational institution, that is what they do. You might have retirement in there. Some companies put bonuses in the fringe pool. Some companies don't put bonuses in the fringe pool. They may put it into some in the overhead, some in the G&A. I don't want to get into the complications, but you can do that. There are some costs that lend themselves to be potentially split up, if you will, between pools. In the overhead, what do you have? Well, you might have labor for training and program management that is not allowed to be charged to the contract. So that's when you would set up an overhead pool if you had that situation. There may be other costs that are used to operate a specific project location, an office, rent, utilities, that kind of thing. A lot of companies these days are operating with all of their employees in a government site, and in which case, really, there is no overhead, which is why some companies don't have overhead. There's no reason for it. What's in the G&A, general and administrative? Things like those kinds of costs that are used to run your company, the accounting of it, the executive salaries, IT, information technology, any professional consultants, maybe insurances, corporate expenses like insurances that are not health insurances, your comprehensive liability policies, your HR, those things that are used to, quote, run the company. Big picture, think of big picture type items. Let's talk in the next slide about what's in the denominator. A lot of people say, okay, so how do I make up the allocation base so I can come up with a rate? Well, here's some suggestions. Doesn't have to be this way, but it is a suggestion. The fringe pool has all of those expenses in the numerator. What's in the denominator? Usually direct labor plus any indirect labor. That would be all of the labor in the company used to run the company, called indirect labor. Those people who are, shall I say, the accounting, the HR, the executives of the company, everybody really does get paid fringe benefits. And so all of those people would go to composing the denominator for the fringe pool. So that's how you would come up with, as I say, the denominator for the fringe rate. What's the denominator for overhead? Well, it's a logical a discussion would be direct labor dollars. Okay, some companies do direct labor hours. That's not usually a favorite way of doing it. The best way of doing it is direct labor dollars, because you've got overhead dollars that you're spending on to run those particular projects, and the denominator makes sense for it to be a direct labor dollars based type of calculation. So what's in the G&A base, the denominator for G&A? And I'm giving you very simplistic discussion here. What would be in here would be the total cost of running the company without the G&A expenses, of course, because you couldn't divide by the expenses because they're part of the numerator. I'm giving you, as I say, a very simple way of doing this. There are some companies that take a little bit more, if you will, fragmented view of G&A, like I was describing back where you saw many complex pools. If you do that, then you've got lots of different ways of calculating things. I'm trying to give you the easiest way of doing it. This is the easiest way. We'll share with you that some companies say that if they've got unallowable expenses, then those unallowable expenses must be put into the base, the denominator for G&A, because just like all your other costs of running your business, your unallowable costs need their fair share too of that G&A cost. Again, when you're allocating the cost back, you need to allocate fringe, overhead, G&A, all to every single project that you've got, regardless of whether it's commercial or government, be it fixed price if it's government, or cost reimbursable, or whatever type of contract it happens to be. You need to be the same in the way you treat your costs and how you actually allocate those cost pools back to all of your projects. Okay, so let's move on to our last slide, next slide, and put what I call a wrap on the cost pools. A little tongue-in-cheek there for me. It makes me kind of happy during the holidays. So I've been talking about being consistent throughout this discussion today, in that you must apply all of your cost pool expenses to every contract that you have, regardless of the type of contract and regardless of the source of that contract. You must be consistent, because if you're not consistent, then the government's going to say, wait a minute, you're treating us differently than you're treating your commercial clients, and they would have issue with that. So let's talk about how you establish your indirect cost pools. I'm suggesting that you start establishing those indirect cost pools from the time you begin your business. Don't wait until you've got a government contract to do that. It's really best to do it that way from the beginning. Sometimes, as I say, some companies don't have an overhead pool. They have a fringe pool and they have a G&A pool. That's the simplest way to do it, and is probably, shall I say, not only the easiest way, but gives you visibility into it. In fact, in number 4, I talk about that. One of the things that I like to tell companies is that I like you to act like a big company before you're one. And by that I mean, for example, starting out setting up your indirect cost pools from the beginning, from the get-go, and doing it right, so that as you grow, as you gain more business, then you become ready to be a big company before you're a big company. And you don't have the growing pains of doing that. I suggest everybody start out simple. Like I said, sometimes all you need is fringe and G&A. You certainly don't necessarily need overhead unless you have an office that's dedicated to supporting a project, in which case you would need to have an overhead. I suggest you only add cost pools as you need them. I once had a client who said, gee, we need to have a lower rate to put on our subcontractors. Why don't we do this subcontract handling pool rate? And unfortunately, they did not have enough subcontracted business to support it. So sometimes you'll hear the government grouse about putting full G&A on subcontractors, but if you're a small company, that's part of what you take to develop your G&A infrastructure in order to be able to support your business as you grow. I want to thank everybody for coming today and attending. I'm very, very happy to do this today and talk to you about cost pools. Thank you, Mallory.
Yeah, thank you so much, Marcia, for joining us today. If you have any questions, please feel free to reach out at the email or phone number shown on your screen. And this concludes the webinar. Thank you, everyone.